Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Monday, July 26, 2010. This morning we're talking about suspend your disbelief. Now, one of the things that I notice quite often when I talk to my mentor clients is that people think that you always need to be right about the market, which way a currency pair is going in order to make money. And, that's not always the case. A lot of times, you may have personal beliefs about something which may, in turn, affect your decision making, which, sometimes can lead you to problems when you're trading the market. So I just want to, make it clear that there are going to be times when you may disagree with something or not believe something that's out there. And you know what? That's okay. As long as you can recognize that, but know what the market's doing, okay, you can still make money in it. And the reason I say suspend your disbelief is because we're talking about the European bank stress tests that came out on Friday. Now, the results of the test showed that only 7 of the 91 banks tested needed to raise more capital. So there's some concern in the marketplace that perhaps the measures they used to test these things weren't stringent enough, or the fact I think it's they need to raise a total of something like $3.5 billion, which in the grand scheme of things is nothing now that we talk about trillion-dollar deficits. So at the end of the day, it was really sort of a non-event. But what this is intended to do is intended to provide confidence to the market and a little bit of certainty. And whether or not it's done that remains to be seen, because actually only time is going to tell if these banks need help or not. But we have our own crisis of confidence going on here in the U.S. and we talk about the exploding deficits we have here, and why people are worried about what's going on in the U.S. And this morning we've got dollar weakness across the board. I just want to show you here dollars down versus virtually everything. There's the Kiwi, Aussie, CAD, even the yen. So it's showing you that people aren't in favor of dollar policies. And when you have a 10-year note which is trading under 3% yield, all right, that's basically they're basically offering you no interest to borrow your money. And they'll tell you that Secretary Geithner will sit back and tell you that this is a vote of confidence here in the U.S. that people are still willing to lend us money at such low rates. But the fact of the matter is that we're really the only game in town when it comes down to it, and there's so much uncertainty everywhere else around the world, and so many people are dependent upon the U.S. economy that it's really more of an issue of nowhere else to stick your money, or a safe haven play, than people are really banking that we're following good economic policies. So in light of that situation, and when you say, well, the U.S. economy is bad, how can you invest in U.S. stocks or something like that? The bottom line is that if everybody believes something's going to happen, then there's going to be times when it's just okay to jump on board and ride the wave, so to speak. So you always want to keep a cautious outlook and keep your eye open for any sort of reversals. But if you want to make money in the market, sometimes you got to go with suspending your disbelief. So just want to look at real quick. You can see the euro's higher. It's the daily chart. Just want to show you the pound as well. Pound's also higher. It's got a nice little move up there. Held on to its 20-day moving average here and going higher, despite home sales figures, which came in lower than expected for the first time in 15 months. So that's something that's happening there. In Australia, we've got the Aussie dollar higher, but PPI figures came in less than expected. Now they're going to have their CPI figures on Wednesday, and that's really going to shed light on whether or not they're going to do anything with rates going forward. Lastly, I just want to show you dollar yen here. Okay, you can see the obvious dollar weakness. Looks like we're getting near bottom, 86. Looks like some decent support. Japan's going to have later this week, I think on Thursday, their CPI data coming out. And while it's still expected to show deflation, it's going to be interesting to see whether the deflation is more or less than is expected. And then the other thing, of course, is to sort of speculate on what the Bank of Japan and the government intend to do about it. So, there's some obvious problems over in Japan. We've talked about possible Japanese intervention. It's going to be interesting to see what happens when those figures come out. So right now it looks like we're in a little bit of a risk-taking day, but I got to tell you, it's not so much risk-taking as it is dollar weakness. Just show you here real quick. We've got looks like the Kiwi rolled over a little bit. The Kiwi's higher. All right, they're going to have their interest rate decision on Wednesday. The expectations for a 25 basis point hike at this point, though that could change. Who knows? So keep an eye on that as well. And that's sort of what we're looking at today. So you just got to remember that the markets are here so that you can make money. It's not so you can pat yourself on the back and say, hey, I was right about that. I called where this was going. No, you want to make money, and one of the ways that we do that is by reading the charts. So when you look at a chart of the dollar, for example, and we can just look at, say, Euro USD, and we've got this nice little uptrend here. We're still holding 20-day moving average. All right, no matter how great people here tell you that the economic policies are and how everybody has confidence in us, you can see that there's obvious dollar weakness out there. And whether or not you believe in the Eurobank stress tests, you got to kind of go with the market and what they're telling us. And at this point, it's saying dollar down pretty much everything else. So that's what I'm looking at right now. I'm obviously going to keep a tight eye on some of the news that comes out. The only real caveat to dollar weakness now is going to be global risk aversion, and that's going to happen from time to time as you got different economies reporting different figures here and there. But as long as structural issues are intact, okay, and there's no major financial crises, I expect we're going to see some continued dollar weakness. And as long as the trend lines hold, I'd be using any upticks in the dollar to sell. So that's what I'm looking at today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.